I'm Sonal Bhutra and you're watching Power Breakfast. Well, it's the last Monday of 2022. We have a lot to catch up on. But yes, not many cues coming in from the global markets because most of them are shut. But let's take a look at the Asian markets again, where except for the Chinese and the markets in Japan are actually shut for trade today. But let's quickly take a look at what's happening otherwise. In Japan, the inflation number came in at a 40-year high, and that is something that is impacting the markets across the Asian screen. The SGX Nifty, as a result of which, is indicating that yes, mostly the Asian markets are lower, but today SGX Nifty is indicating a start in the green. A 30-point uptick is what SGX Nifty is indicating as we speak. Let's talk about the US markets now. Wall Street ended a volatile session higher on Friday, with the Dow Jones closing 176 points higher, the S&P 500 ending over 0.5%, and the tech-heavy Nasdaq Composite with just a 20-point gain. Despite all three indices finishing in the green, Wall Street posted its third weekly loss. CNBC's Contessa Brewer gets us a wrap of all the action on Wall Street.
Modest gains for stocks on Wall Street today, but they're still on track for big losses this month. Most investors have stopped debating whether there will be a U.S. recession next year, and now they're trying to figure out how bad it will be. The Dow closed up 0.5%, the S&P ended 0.6% higher, and the Nasdaq finished with an increase of 0.2%. Americans are enjoying those lower-priced gasoline. The national average here dropping toward $3 a gallon, almost $2 below the peak in June. But of course, crude oil prices are beginning to rise as the West tightens Russian sanctions and the lifting of COVID restrictions increases demand from China. If that trend continues, gasoline prices likely will start to move higher again in the new year. And we're looking at delays for holiday gifts. FedEx and UPS say their transportation hubs are being severely affected by winter storms that are disrupting flights around the United States. That's the action from the U.S. market. I'll send it back to you in Mumbai.
All right, that's the global market action, but how will these overnight cues impact our own markets? We have our research team joining in to tell you just that, the trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. First up, Vivek, let me come across to you. What is the market setup looking like today?
Well, good morning. We are actually ending the last week of trade as far as 2022 is concerned on a very, subdued note, especially as far as Indian markets are concerned. Last week, we were ranked underperformers, but let's have a look at the kind of handover that global markets have given. A flattish positive close as far as US markets were concerned. However, the Nasdaq as well as S&P 500 closed lower for the third straight week, last week. Now, when you're talking about European markets too, very flat cues, and, most of European markets as well as US markets saw very thinly traded volumes on the back of this being a holiday week for them. Today, in fact, a lot of markets across the globe, equity markets across the globe are closed. Now, when you're coming to crude oil prices, this is going to be one worry that we'll keep an eye out for. Brent futures ended up over 2.5%, almost up to $83 a barrel. This is on Friday's trading session. WTI futures too increased over 2.5%, and today trading session to indicate quite a significant jump up as far as crude oil prices are concerned. This is on the back of the fact that Russia indicated an output cut on the back of price cut announcement by the G7. Now, coming to the Indian markets last week were ranked underperformers. The mid-cap and the small-cap index bore the brunt of very sharp selling pressure. That is going to be the key to watch out for this particular week, whether that particular pressure, mainly exacerbated by the fact that margin calls were triggered across quite a few broking houses. And today's trading session, Asian markets, not too much of cues to take in there. Quite a few markets are closed today. SGX Nifty is indicating a mild green start for our own markets.
Yes, it is. So not a lot of action in the global markets. Volumes thin as well. Vivek, thank you so much for joining us with all those cues. Over to Surbhi now. She's joining in with the stocks that will be in focus today. Surbhi?
Hi, good morning. Thanks for that. So I have a few stocks on my radar this morning. The first one is Suven Pharma, where CNBC-TV18 News break is confirmed and Advent International is going to acquire significant stake in the company from Justy family. As a part of this transaction, Advent will also be making an open offer to acquire additional 26% stake from the public shareholders. Next is Alchem, where the company is going to sell 8% stake in subsidiary Enzene Bio for 161 crores. The company is selling this stake to 8 Growth Ventures and F Prime Capital. Tata Motors, where Delhi Transport Corporation signs a definitive agreement with Tata Motors subsidiary for operating 1,500 electrical buses. Quest Corp, where the company withdraws scheme of amalgamation with Allsec Technologies, which was earlier approved in June of 2022. SVJN, where the company expands its footprint in wind energy and it secures a 100 megawatt wind power project. And the tentative cost for this project is 700 crores. Welspun Corp, where the company commissions its state-of-art coke oven plant in Gujarat through Welspun Metallics, the wholly owned subsidiary of the company. And lastly, restaurants brand Asia, where the company is launching its iconic US fried chicken brand Popeyes in Indonesia. The company aims to expand rapidly by opening 300 restaurants in the coming years.
All right, Surbhi, thank you so much for all those cues. And finally, Manglam is joining in with all the cues from the FNO space this morning. Manglam?
Good morning. So, this is the expiry week. It was a brutal day of trade on Friday's trading session. The Nifty actually in the last 3 sessions itself has, declined almost 670 odd points. The flows, however, don't capture that data because the FIIs, they sold a mild bit, around 707 odd crores. And that's primarily because institutional volumes are on the lower side as well. The DIIs went ahead and bought around 3,400 crores. Part of that is on account of a larger, a bunch of block deals as well. But importantly, in index futures, FIIs sold about 550 odd crores, added about 6,000 short contracts. And in index futures itself, from the start of the week where the FIs were long by around 59 odd percent, now their long exposure has dropped just to 44% and shorts have increased to 56%. What really captures the mood on the street is the way the FIs are selling calls. 1.4 lakh calls sold for just about 70,000 puts which are sold, and across 18,000, 18,100 and 18,200 we've seen open interest addition of nearly 1.5 crore shares. There you have the 18,000 call, almost 81 lakh shares added in open interest. 18,100 has 53 lakh shares added in open interest, and 18,200 adding almost 30 lakh shares in open interest. What this means is that every move on the upside will be faced with stiff resistance. It's becoming like a sell on rise market. The 17,800 put, which is about where the Nifty is right now, has seen some addition in open interest for a premium of 100 odd rupees. So the first support that the bulls would be looking at would be close to that 17,700 mark. The put call ratio at 0.72 is oversold. Usually from 0.7 to 0.75 levels is where we see a bit of a bounce, but it's not necessary that there could be one. Importantly, the Nifty is now below the 20, 50 and 100-day moving averages. The Nifty Bank too is below the 20 and 50-day moving averages. In terms of broader long-term support, we'll be watching out for the 200-day exponential moving average on the Nifty, which is a little over 17,400, and the 100-day exponential moving average on the Nifty Bank, which is a little under 40,750 points away from here. Not to say that the market would go there. The SGX Nifty is indicating a largely flattish start, mildly in the green, but over the last few trading sessions, every time the market started in the green, we've seen a bit of a sell-off.
Welcome back. Former CEO of ICICI Bank, Chanda Kochhar, and her husband, Deepak Kochhar, remanded to CBI custody on Friday in a loan fraud case. The couple has been accused of alleged irregularities in a loan of over 3,000 crore rupees provided to the Videocon Group when Chanda Kochhar was heading the private sector bank. Santya brings us the key developments in the case over the weekend.
CBI custody of the Kochhar couple ends today, talking about what happened in the last hearing on Saturday when the Kochhar couple was produced in the court. CBI, while seeking their custody, said that because the couple did not cooperate when confronted with the fresh evidence and new documents, that's why the agency had to arrest them. Defense argued that the defense called this arrest an illegal arrest and said that first CBI cannot explain non-cooperation here, cannot claim non-cooperation here because in all these years the Kochhar couple was never summoned by the CBI. It was only in July 2022 that the summons were issued and the Kochhar couple adhered by those summons. Apart from that, the defense also argued in the court that because Chanda Kochhar is a public servant, ideally CBI was supposed to get permission from a competent authority under Section 17A of Prevention of Corruption Act before arresting her. That was not done by the CBI. CBI claimed in the court that the agency, in fact, did secure the permission, but when the court asked to produce the permission, CBI couldn't produce that document. Talking about CBI, so today the remand gets over today, and what happened in last 3 days when the agency had the custody of the Kochhar couple? What happened in terms of custodial interrogation in last 3 days? That's something the agency is likely to inform the court about today.
Okay, all right, Sandhya, thank you so much for bringing us all those important details. Moving on, the government has merged the Pradhan Mantri Garib Kalyan Anna Yojana that was started in 2020 during COVID with the National Food Security Act. After this move, food grains to be made available free of cost to more than 800 million beneficiaries till December 2023 under National Food Security Act. Sapna Das is here with the details. Sapna, what is the fiscal impact of this decision?
Well, finally, the government has been able to take a call in allowing the Pradhan Mantri Garib Kalyan Anna Yojana to actually sunset December 31. From Jan 1, the new regime under NFSA or other free food grains via PDS, that will get operationalized from Jan 1 onwards the entire calendar year. The government upfront has given the estimated food subsidy arising out of that, and that's 2 lakh odd crores. Now, we are given to understand that the additional cost because of food grains going free under PDS from Jan 1 is likely to be 20 to 25 odd thousand crores for the entire calendar year. This is significantly lower than whatever additional costs the government has incurred in terms of higher food subsidy bill due to the PMGKY extensions. That's one. The second significant part, of course, is that even this 20 to 25 odd thousand crores, which is hardly 0.1% of the GDP, has been included in that 2 lakh crore estimate given out by the government. So I think there is room for ample fiscal savings for the government. I think that's going to fare very well in terms of managing the food subsidy as well as taking care of the weaker sections of society.
Back, you're still tuned into Power Breakfast on CNBC-TV18. Well, we spoke all about the equity markets and other markets as well. It's time to talk about the commodity space. Manisha is joining us with all the update here. Hey, Manisha, good morning.
Sonalai, thank you so much for that. Well, with the U.S. markets shut today and the many other markets headed into holidays already, the volumes have really come down. But having said that, if you look at the crude oil prices, we've put in 2 weeks of gains. The Asian markets right now are barely moving and the volume is also very low. But what the street is looking at is the statements from Russia, which is looking to cut output by 5 to 7% in response to the G7 price cap from the first quarter of 2023. Also, when you look at the Russian Baltic exports, they have declined by nearly 20% for the month of December on a month-on-month basis. Also, it is about the bitter cold, the gasoline, heating oil prices, diesel prices have surged due to the storm Elliott, and nearly 1.5 million barrels per day of refining capacity is shut along the U.S. Gulf Coast. So that is keeping the prices supportive. We did see 2 to 3% of gains on Friday, and that's exactly where the markets are trading in Asia as well right now.
Okay, all right. Manisha, thank you so much for all those cues from the commodity markets. Clearly, the bigger one is that volumes are really low across all the markets. Staying with the commodity space, let's listen into some important opinion coming in from Edward Morse of Citi and Amrita Sen of Energy Aspects on energy prices and what to expect in the new year.
I think it's going to shape up significantly like 2022. We think there's going to be more oil in the market than demand. We have Chinese recovery not really happening yet. There are no lockdown measures, but people aren't going back to work because of the record amount of COVID. So any recovery is going to be toward the middle of the second quarter at the earliest. And we have a U.S. recession, or at least a sharper slowdown coming up before that. And as we look at demand right now, year on year, it's lower than it was a year ago. So we think supply is going to be more robust. The Western Hemisphere is going to be adding a good 1,400,000 or 500,000 barrels a day alone.
What has happened for crude oil this year is we've actually had more oil hit the market than's been taken out because we had a huge amount of SPR release from governments around the world, but particularly the US. And then at the very end of the year, we were hit with more lockdowns in China, some unexpected things around strikes in France, etc., which really kind of made the market collapse. We've also had a lot of year-end liquidation. Embargoes just kicked in on Russian crude. We are tracking Russian exports falling already a fair bit. And I'm sure you've seen Deputy Prime Minister Novak has come out and said from early next year, Russia might have to cut production by about 500,000 barrels per day. That's one aspect. The biggest aspect for me, of course, remains China.
Okay, that is about the energy prices. But moving on and talking about some COVID news, a 40-year-old man from Agra has tested positive after returning from China. The man has been isolated and samples will be sent for genome sequencing. In light of rising concerns, the centre has also ramped up anti-COVID measures. RT-PCR tests are now compulsory for passengers arriving from China, Japan, South Korea, Singapore and Thailand. The centre has also asked states to conduct mock drills tomorrow, the 27th of December, to ensure readiness of health facilities and availability of oxygen in case of a rise in COVID cases. Okay, all right. With that, it's a wrap in this edition of Power Breakfast. But do stay tuned. All the market action next on Bazaar Morning Call.